We'll start in a few minutes, guys. Maybe in 3 to 4 minutes we'll get started. Give a few more people to join, and then we'll get started. Thank you so much. Can someone please confirm on the chat if I'm visible and audible? It would be great if you could do that. Okay, let's just get started. I'll share my screen. Is my screen visible, guys? Okay. So we are actually going live with a power hour between 5 to 6 p.m. And there are four deals for this power hour, which are offering up to 14.7%. So these companies are Human, Wings, Saveo, and Metalbook. So the purpose of this webinar is just to give you insights into these companies, help you understand them, and in this way you can get a better understanding of these companies before you make an investment. Right. So just to help you make informed choices. Let's just get started with Human firstly. So let me just open the deal docket. Okay, so if you can see, they have over 49 mature deals and they have made payment on time 100% of the time, right? So they have nine active deals which have not yet hit maturity. Then they've raised over 5.45 crores on our platform. So if you scroll down, you will be able to see the deal docket, which is where you'll find all the information that you would need to understand the company better. So Human is basically an AI-powered photography management platform that basically streamlines workflows and enhances collaboration. Right. So it's basically a SaaS platform, so software as a service, and their revenue compounded over the last year. So basically, quarter four of FY22 to quarter four of FY23 was around 30%, almost 29.6% was their revenue CAGR. So they have actually served over 2,000 clients, and the average ticket of each client is around $85,000 annually. So SaaS, the benefit is that you basically have predictable revenues. There is high growth potential, and you have strong profit margins. So you can imagine if each client has over $85,000, and they can add more clients over time, their revenues are bound to increase substantially. So that is one of the things I like about Human and basically the SaaS business model in general. So the company's revenue grew by 389%, which is almost 4x their revenues between FY22 to FY23. And this basically speaks about their strong business growth. And the wedding industry has a lot of potential in India. So it's this is a high growth industry due to high disposable income in India. Signaling effect. So people like to do a grand celebration of their weddings, and because of things like this, platforms like Human tend to have higher margins and also tend to be profitable. So, which is the case with Human. They are actually a profitable company. Their profit is around 1.56 crores and their margins are great at around 13%. So 100 rupees worth of revenue gets converted into 13 rupees of profit after tax, which is quite a good margin. So if they are able to scale up in revenue, it will contribute to the PAT as well, which is great for investors and equity investors as well in general. So if you look at the market of Human, right? Let me just Yeah, so in general, the global photography market is growing rapidly. So the reasons for this fueling is basically due to increased demand for professional services and digital tools. As I mentioned, they are a software as a service platform provider. And moving on to the next company. Okay, so we'll move to Savio now. So right now they're offering 14.71 between 5 to 6 p.m. and they have over 44 mature deals. They have raised almost 10 CR with us and they have made 100% on-time payments. So the tenure of this deal is 62 days. And if we move on to the deal docket, so Savio is basically a B2B online marketplace. They basically simplify procurement for pharmacies, and they partner with TAP Invest in April of 2022. And this has helped them, revolutionize in the pharmaceutical industry by unlocking working capital requirements through invoice discounting, right? So their tenures are between 30 to 60 days, depending on the requirement that comes up. Savio can use these fundings to basically expand operation, improve efficiency, and also strengthen its position in the retail markets without significantly, taking on more debt or raising more equity, which will lead to dilution, right? Okay, so if you go on to the market opportunity in general, India's pharmaceutical industry is basically a powerhouse. They are one of the global leaders, and we actually supply over 20% of the world's generic medicines. Maybe we don't have as much of a foothold in the R&D and all that, but generic medicines we are able to provide at an affordable cost, which has made us a global player. Um, the market right now is valued at around $50 billion and is projected to reach around 130 billion dollars by 2030. So Savio is well positioned to capitalize on this, right? And so the pharmaceutical industry also can benefit from strong government support. So they actually get benefit from the PLI scheme, so production linked incentive scheme, and they also have cost effective production. And India's workforce is in general is very cost effective, so the margins tend to be good here if you are actually dealing in the international markets as well. So Savio's sales volume grew by over 186% between FY 23 and 24, and they were actually ranked second in the Deloitte Technology Fast 50 in India. This was in the year 2022. So if we look at their financials just briefly, just giving you a holistic picture, in FY24, their revenue was of 184 crores and their EBITDA is negative 23 crores. So, negative EBITDA usually signals something troublesome, but Savio is in their growth phase, right? So, if you see their EBITDA percentage, it was 43 EBITDA loss percentage, it was 43% in FY22, which is a decent sized EBITDA loss, but that actually came down to 24% in FY23, and in FY24 it's just 13%, which is great. So they are extremely close to becoming EBITDA positive, and they are targeting this by FY25. But if you see, their revenues are growing quite rapidly, as I mentioned. So from FY21 to 22, they are almost 6x their revenues, and then between 22 to 23, they had almost 1.9x the revenues. So in at this pace, they will turn EBITDA positive by FY25, as I mentioned. The next deal we can move on to, it should be Wings. So this is a short tenure deal. The tenure is 47 days, offering an XRR of 14.7%. They have a lot of mature deals. So they have over 132 mature deals, and they have raised over 45, almost 45 crores from us. So Wings basically backed by a huge gaming company called Nordwind Gaming, also Nazara. So Wings is a D2C brand, so they directly deal with customers through their Flipkart connection, and they basically deal in stylish. stylish, innovative gear, right? So they also have smartwatches, they have laptops. So they are just focusing on the younger generation of India to give them more stylish and affordable options. So they have actually benefited quite a bit and will continue to benefit from the Make in India scheme. If you see, a lot of these headphones and earphones are actually manufactured in China. So Make in India actually benefits Wings, who actually tries to produce these in India itself, and they're actually well positioned to grow using this scheme. The, Let me just open the deal docket. Okay, so if we move on to the market, the just a second. Okay, so the Indian audio and lifestyle accessories market is growing rapidly, as I mentioned earlier. So there are a lot of young tech-savvy individuals who want stylish products which are affordable, right? So India actually, if you see, it's a very price-sensitive market. Indians tend to be more price conscious compared to other economies. This is where companies like Wings actually have an advantage, where their products are priced at it's in between that medium to lower medium price range. So in a price conscious market like India, they are actually positioned quite well. They are actually project The market is projected to be worth over 16,000 crores by FY 27. So even if you tap into 5% or 3% of the market, you can imagine the scale that a company can get to. Moving on to their financials briefly. Okay, if you see some of the interesting numbers that you can see here, their revenue was around 110 crores in FY 24. They have sold over 10 lakh plus units through Flipkart and their own website. They also have 190 plus SKUs, basically knowledge units, and their repeat rate is of 15%. So, which basically shows the quality of their products and the fact that almost 2 in every 10 customer comes back to them and purchases more goods from them, right? So with India too, basically the tier 2 and tier 3 population of India growing, companies like Wings are actually positioned quite well because they like to offer more premium looking products which are actually affordable. So Wings actually tries to tap into this particular section of people, and with that disposable income of India growing and the tier 2 and tier 3 cities growing, Wings is positioned well to capitalize on this growth. Finally, the last deal that we can move on to Metalbook. So this is a new listing, which is why you won't be able to see any mature deals. I think they went live around 4 days ago, and they have four deals, and they have already raised almost 1.7 crores in just a span of less than a week. The tenure here is 62 days. The earlier deals were of 47 days, and that is still live on the platform. So if you prefer a shorter tenure deal from Metalbook, you can go for that, which is offering 14.5%. So if you open the deal docket right now, so Metalbook is basically a digital marketplace that revolutionizes the metal industry. So this, if you people have exposure to Hella Infra, this is quite similar, but they only deal in metal. So this is quite similar to No Purchase as well. So basically, procurement platforms who connect buyers and sellers. So they were founded in 2021, and the interesting fact is that their revenues have grown to almost 750 crores in the span of just all 3 years. So this gives them a compounded growth of revenue of around 200% to 205%, which is quite great. So they basically streamline the metal supply chain. They connect buyers and sellers and offer financial services. So basically, they help companies fund with funding and all that, and also help them optimize their supply chain and working capital. If you look at the industry in general, the metal industry is growing rapidly, fueled by a lot of focus on infrastructure. Especially in developing economies like India, infrastructure is quite important, right? So India has again strong government support in this industry, which helps a lot of these infrastructure-based companies benefit. And the industry is undergoing a digital transformation, more focus on digitization and emphasizing sustainability and supply chain reliance. So, if you move on, we'll be able to see that they have all connected over 4,500 stakeholders. And as I mentioned earlier, the CAGR of their revenues of 205%. And the products they deal in are ferrous, non-ferrous, custom manufacturing, and metal recycling. Moving on to financials, just briefly, the company has achieved significant growth. As mentioned earlier, their revenue has grown by almost 76% between FY22 to 23. And the company's strong performance continues into the next fiscal year. So current fiscal year has actually been even better for them. They have already achieved 610 crores of revenue between until September 2024. So between March, April to September, they have earned almost 610 crores, which is a significant improvement from 316 crores, which was how much they had achieved in the same period last financial year. The company has almost 2x their revenue in the same period, which shows how fast the company is growing in terms of revenue. And when they're able to capitalize this revenue and come out of that growth phase, they will for sure be able to make a profit. And the company has done quite well in the past 3 years of existence. So this is about it. We can move on to questions if you have any questions. Before that, if you have any queries, you can always reach out to your relationship manager. So you will be able to see them here. So you can either message us or request a call back, and we'll get in touch with you and help you with your queries. So if you have any questions, we can move on to them. If not, we can wrap up. Any questions, guys? We'll wait for a minute and then we'll wrap up. If there are no more questions. Okay, I don't think there are any questions. I will wrap it up, but it would be great if you people could check these deals out. And if you have any queries, feel free to reach out to us. We are always there to help you. Thank you so much.